Hey everyone, welcome back to Corporate Decoder, the place where we take a look into the exciting world of corporate filings. Today we are diving into a Form F-1, which is a registration statement for a company planning to offer its shares to the public. Now this one is a bit like finding out your favorite restaurant is offering shares instead of just serving food. Interesting, but you really want to know if the numbers add up. So let's decode this filing for Heidmar Maritime Holdings Corp, a shipping company, and see what's going on. Actually, before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we discuss this and many more topics. And first up, the filing states that it's a registration statement to offer common shares. These shares are being offered by a selling shareholder named B. Riley Principal Capital II, LLC, a company that may be an underwriter. The company itself, Heidmar Maritime Holdings Corp, might get up to 20 million some cash down the line while giving an existing investor a chance to sell their shares to the public. The preliminary prospectus states the shares are subject to completion, and the filing date is June 9, 2025. It seems that Heidmar is what's called a foreign private issuer and an emerging growth company. Both mean they get to follow a slightly different set of rules than your average US public company, requiring less information disclosures or not being subjected to certain liabilities and regulations. That means they get to do less reporting to the SEC, which might make some investors a little nervous. It is worth mentioning that industry data is based on estimates and past performance is not a guarantee of future results. But it's important to get a sense of the industry and to review the potential risks. Looking at the offering, we see up to 11,080 Syrian 332 common shares are being registered for resale. We also note that all of these shares are being sold by the selling shareholder and not by the company. The purpose for this offering is not for the company to receive funds, at least directly. It is an existing shareholder looking to cash out, even though it will cause dilution, which basically means each of the shares investors already own will be worth a little bit less. Think about it like slicing the cake with one more person invited to the party, each slicing the cake with one more person invited to the party. Each slice is smaller. The company may later receive up to 20 million later, receive up to $20 million. Now, about that potential $20 million, the company says it might use the money to acquire vessels and for general corporate purposes. However, they don't have any specific plans yet, so it's all a bit vague. There's a conflict of interest because B. Riley Securities is helping with the sale, which creates the need for an independent underwriter, a qualified independent underwriter, or Q Seaport Global Securities LLC, to help manage. This is because this whole transaction involves affiliated entities. Seaport will get a cash fee of $50,000 for their work, paid by BRPC2. No report is complete without a whole lot of risk factors. This list is big, so let's just grab a couple that stick out. There is a risk that customers need to keep up with compliance and quality. So if the customers don't think our ships are good enough, we lose money. Charterers also need to be reliable, otherwise we might not get paid. And if we want to expand our fleet, we need to find the right crew members or our financial performance could suffer. Egg to macroeconomic conditions and global events can also impact our business. Trade wars, political problems, international hostilities, Ukraine, Red Sea, and supply chain risks. Basically, the world is a risky place and the business is affected. Now let's check out who owns the company. Ria Marine and Mastro's Ship Invest are the big players, each with about 45% ownership of the company. Having a majority of shares held by two shareholders means their interests may not align with yours. This is where we see what's what. If you are the small investor, you are along for the ride. A lack of research reports on our business could affect the price and volume of our common shares. We also have the tax man to worry about. We might not be treated as a non-US corporation, or we could be labeled a passive foreign investment company, both of which would lead to adverse tax consequences for our shareholders. There's also this whole thing with the committed equity financing. In short, there is an agreement with B. Riley, but it's not clear how many shares might be issued or what the proceeds will actually be, so things may not be as green as it seems. Our ability to pay dividends may be limited in certain instances. They have never paid dividends and might not be able to. The cyclicality and volatility of charter hire rates for both dry bulk and tanker vessels could be a cause of concern to you. Operating outside of the United States also causes uncertainty related to risks of international operations, including trade embargoes and sanctions. Let's look at financial data, the audited results for 2024 and 2023 from Heidmar Inc. This part is important. Management basically tell us what is up. Let's see what they say, what they brag about, and what is in there to be concerned about. We depend upon a limited number of charter customers. 3 charter customers accounted for 71% of total operating revenues. As we expand our business, we may have difficulty managing our growth, which could increase expenses. The tanker vessel industry is cyclical and volatile, which may lead to volatility in the charter rates we are able to obtain for our managed vessels. Alright, now let's talk money. The pro forma combined financial statements are unaudited, so take it with a grain of salt and are based on combining Heidmar and MGO numbers. Use what stands out to me from this document. Pro forma cash is about $15.6 million combining assets from both sides. Keep in mind how they just paid 8M of that in dividends. Goodwill jumped up to around $10 million. This might be interesting to follow. Total combined revenues were around $32 million, but there are a few lines from both companies that need to be subtracted, like general expenses and other fees that result in a loss of $5 million. Looking at share ownership, as of June 3, 2025, we have Chapu. There are 48,008 Renkaj Kana. Our CEO controls about 45%. Yuspang Kankaj Kana. Our CEO controls about 45%. We have about $500,000 expenses for this whole thing, Actio. So, after digging through this F-1 filing, what's the verdict on Heidmar Maritime Holdings? Well, the shipping industry is a tough one, with lots of ups and downs. Heidmar has a long history, but they're heavily reliant on a few big customers, and expansion plans might be tricky. The company seems to have solid relations in the industry, which helps them get more vessels in the pools. But on the other hand, the company itself doesn't make a lot of profit directly, and is reliant on the profitability, 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 and is reliant on the profitable or economic conditions outside of their control. Alright, that's a breakdown of Heidmar Maritime Holdings F-1 filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description too. Thanks for watching. See you next time.